Hello, everyone. I'm Rich Karlgaard, editor-at-large at Forbes, former publisher of Forbes, and I've been delighted about doing this interview and excited about doing this interview for weeks, ever since Jamie brought it up. One of the most impressive, bright people that I've ever met, and you can Google Marko Papic's name and put it into YouTube, and he's done all these great interviews. One of the broadest and yet deepest geopolitical thinkers in the world today, and one for whom you can tie his observations to how markets are likely to respond. You know, which parts of the world economy are going to boom, which ones are going to struggle, and so on. And so he's really terrific that way. Marko is a partner in an alternative investment firm called the Clocktower Group. He's a partner, chief strategist. He provides their Geopolitical Outlook. He provides bespoke research to clients and partners on geopolitics, macroeconomics, and market. He's an author of a book called Geopolitical Alpha, Getting Your Financial Return Alpha Better Than the Average Market Return by Understanding What's Going On in Geopolitics. And we're going to talk about his book a little at the end. But when I studied Marko's recent work, the thing that stood out more than anything else is he's probably the most knowledgeable and learned China extreme bear out there. Is that a correct assessment?
Depends what perspective you take. You know, so if you're an investor, you cannot be a bull in China. Why? Well, because if China's going to do great, we're going to have World War III, and then you should not invest in China. Right? So if China's going to take over in 10 years, the US government's going to freak out. You're not going to be allowed to invest in China. You're going to have to take all of your allocation, all your stuff, all your goods, whatever, back to the US, and then you have to be a bear in China. So that's the irony of the outlook on China. If you're bullish in China and you think China will come to be one of the global superpowers, that I guarantee to you, this country will ban you from doing trade or investment in China. That's a guarantee. So the only way to actually be a bull in China and think you can trade with China, invest in China, buy stuff in China, sell stuff in China, is to be a bear in China. You have to believe that China has peaked as a global power. And so I don't know how to answer that question, Rich.
Well, I would say that you are out there all alone in saying that China has peaked as a global power.
Yes. So I am the only person on that corner. I'm having a beer by myself there. I think, and what's ironic about this is I love the Venn diagram here in this country of people who are China hawks, right? China's the biggest evil in the world, but they're also bears in China at the same time. Like, how does that work? How is China going to eat our lunch if you're also bear? You can't be this both at the same time. So I am bearish on China's ability to be like a global superpower. Yes, I think they've peaked. But at the same time, I think that will force them to actually be a pretty accommodating power. That they've actually peaked as a challenger to the US. And that makes me a little bit more comfortable thinking that we could invest in China or do business with China and so on.
Well, give us some data points on why you think, why you've taken the contrary opinion that China has peaked as a geopolitical power. Now, are you mainly talking about as a military power or an economic power or both?
Well, I mean, and both are very much aligned. You know, one of the reasons the Soviet Union collapsed as a military power is that their economy wasn't dynamic. So when I think about China having peaked, I think in terms of both economic and military, and I'll talk a little bit about where does this come from. There are several traps that I think China has fallen into. The first trap is really a geographical trap, where they're extremely dependent on imported energy. And Russia cannot supply enough of it via pipelines. Most of Russian energy production is actually in the Arctic or in central and western parts of the country. There are some pipelines that go to China, not enough to supply China's needs. So China actually relies on ships transiting the Hormuz Strait to supply it with oil. And there's a problem with that. The US Navy controls the Straits of Hormuz. And they do not have the power projection and will not have it over the next 10 years to deal with that. So that's their first trap. It's a geographical trap. They're trying to overcome it, I think, in a correct way. They've thrown their weight behind like an EV revolution. A lot of people here in the West think it's a joke because their EVs are powered by coal. Sure, whatever, I don't care. It's not a joke because it's a national security issue for them. It might be a joke from a climate change and doing something about that, but it's a real national security need for them to become more independent. But again, that's going to take a decade. So they're in a trap geographically. The second, much more serious problem for China is that the middle class story of China is dead. Dead. Gone. Done. If you're investing in anything related to the middle class in China, you're going to lose all your money. Why? Very simple. Chinese households are more leveraged than the American households. Chinese debt as percent of disposable income is higher than the US.
And what percentage of the population of China are you talking about when you're talking about middle class or greater?
I mean, it depends how you calculate it. I would say about like World Bank definition of middle class is consumption per day, and it's over 50%. So you're talking the largest potentially middle class like on the planet.
But now no longer growing, and in fact going the other way?
Yeah, and the reason for that is that what China did last cycle is it went from fixed asset investment in infrastructure, and it focused on leveraging its private sector. Why? Because we became obsessed with austerity. So 2010 comes along, the Tea Party rises, we decide we're not going to stimulate our own economy because that's a smart idea to do into a balance sheet recession. Let's leave that aside. And China's like, what the hell are you guys doing? You're not stimulating your economy. So China decides to leverage its own private sector. And they did that for the last decade. And their middle class bought the second condo, bought the third condo, furnished both condos, bought the car. They're done. They're up to here with debt. They're pushing on a string. Now, why is this important geopolitically? Because when you hear the Chinese Communist Party or the American hawks, who, by the way, sing from the same hymn, and I find it hilarious, when you hear them, they're like, oh, China's going to become more domestically driven economy. Pfft, okay, how? How are you going to do that? Where's the demand going to come from? Who's going to buy stuff in China? It's over. Which means China's going to have to remain, if not double down, on export-driven growth. Which is why, by the way, they've done all this regulatory focus on the TMT sector. They're crushing their TMT sector because they're trying to increase hard tech and manufacturing in China, which I think is a smart move. Manufacturing is where productivity gains are going to be made. And, but
basically you're saying they want the Jack Ma's of the future to invent new power sources or things like that.
Yeah, I mean, they're basically abandoning the American model.
Yeah.
The TMT, service sector tech model, and they're replacing it with like the Mittelstand of Germany model. Now here's the kicker. What does this have to do with geopolitics? Well, you're not going to invade people who buy your stuff, okay? If you're making manufactured goods, you're going to make a surplus of them, and then you have to sell them to someone, and you better be nice to them. So no, China's not going to like invade Taiwan, because then we're going to stop buying their stuff. So that's the second reason. The third trap is a demographic trap. Now, people talk about Chinese demographics incessantly. They don't know what they're talking about. Like, they have bad demographics, whatever. That's cool. Japan has terrible demographics. Japan is a pleasant place to go to, okay? The reason the demographics in China matter is because when you get old, your savings rate goes down because old people don't save. They spend. They save between 45 and 65 years old. That's when you save, when you're making the most money in your life. When you become elderly, you're pure consumer. And what happens with the savings rate of a country when it ages, it falls. But if you maintain a same level of investment, then what happens? If you don't save enough as a society, but you invest at a high level, you fall into a current account deficit. Now, this is kind of macro 101. I see eyes are glazing over. We're outside. You guys are like, what is he talking about? Very simple. Very simple. You're going to have to import capital. You're going to have to import capital. So I'm talking about a country that's geographically trapped. It's going to be more addicted to exports, and it's soon going to depend on you to balance their current account deficit. They're not going to invade anyone. Now, what's empirical evidence of what I'm talking about? When was the last time you heard about an incident in the South China Sea? When was the last time they harassed some Philippine fishermen? When was the last time the Chinese Navy confronted the Japanese fleet? When was the last time any of these news items flashed across your
Well, they're
screen?
still harassing Taiwan with sorties into the Taiwanese airspace, right?
And they've been doing that for a long time.
Yeah.
But in terms of South China Sea expansionism, they've reined that in. And in terms of...
Are they walking back the dotted line?
I mean, they're never going to walk it back. It's on the passport. If you open up a Chinese passport, by the way, Chinese territory is like half the world. It's hilarious. The outline of China, it's awesome. My point is, though, like in terms of actual military actions, they have scaled down their ambitions, and they're actually trying to be quite nice to the countries in the region. So now, obviously, you're not hearing this anywhere. You open up any op-ed in a newspaper, it's going to be like, China's going to eat our lunch, China's evil, China's this, China's doing this. Like I don't write op-eds for a living. I invest for a living, and so that stuff to me is backwards thinking. The time to forecast China-US tensions going higher was 2010 and 2011. People writing about Cold War 2.0 in 2022 are 10 years late. We had that. The forecast was right. The next 10 years, I think China is going to peak, and we're not going to really be focusing on this for the next 10 years. It's like studying Arabic, right? It's like studying Arabic in 2012. Like, you're late, bro.
So they have a big party congress coming up in November. Would you say that what you said about China, that it's as a geopolitical power, it's peaked? Would you say the same thing about their president and his political power? I mean, this zero COVID policy has been an outright disaster. I mean, how much do you think Shanghai going into a deep depression, self-inflicted, will that shave off of China's GDP this year?
That's a hard thing to answer, because I'm not sure the zero COVID policy is, maybe as stupid as we think in the West. Obviously, they should have just imported vaccines from the West and been done with it. But if we assume that they can't do that for face-saving reasons, then, there's a lot of old people in China. The mistake was the zero COVID policy because there's no natural immunity. Hey, Sweden got it right. Sorry. So you don't have vaccines. You didn't do the Sweden move. So what are you going to do? You got to keep locking down. And there is popular support for the Chinese approach, not in Shanghai, but nobody cares about Shanghai in China. It's like when New York City has a problem with something, like the rest of the country is like, yeah, let's lock them down. So that's where I'm not sure what's going to happen politically, domestically, but I can tell you this, the data I look at, PMIs, services, manufacturing, unemployment, it's all at 30-year worst prints in China. So I would just say, and my framework was usually focused on constraints of policymakers, I would say that they have to pivot from this strategy. Whether it's Xi that does it, whether it's Premier Li who seems to be making a move, I don't know what it is, but I think they'll pivot from the current trajectory. And I also think on top of this, they're going to have to go back to the 2002, 2012 China. What do I mean by that? Because the private sector is over-leveraged, because they have a balance sheet recession, because they're pushing on a string in terms of interest rate cuts, they're going to have to go back to the old school China of building stuff they probably don't need. And what is that going to do in today's world where we're all building stuff we probably don't need, where we're already in a commodity supercycle? If China goes back to the fixed asset investment-led growth model, we're going to have a commodity supercycle for the rest of this decade.
Well, let's come back to that, your views on the commodity supercycle, but you have some strong thoughts on what's going on in Ukraine, and just were you surprised just at how poorly, number one, how poorly performing the Russian army has been, how much they've botched this, and I don't say that hoping that Russia would win, just as an observation, they really have done poorly. And two, how much the West and Western private companies, without any sort of direction from our government, companies like Starbucks, everybody rising to Ukraine's defense and voluntarily withdrawing commerce from Russia and things like that. I mean, those have been two kind of shocking developments about this whole invasion.
So, okay, I'm not surprised at all by how Russia has performed. At all. At all. In fact, I am so proud of my forecast on that. It's one of the best forecasts I've ever made. Everything that happened in Ukraine, I forecast correctly, except the Russians would be stupid enough to invade. So let me walk that back for you right now. A friend of mine said, Marko, incredible, incredible. You were so right, Putin was so wrong. The only difference is you write investment research on the beach in Santa Monica, and he's the president of the Russian Federation. So which forecast mattered? So in other words, I'm not surprised at all. What evidence do we have that Russians know how to fight a war? What, like World War II? They barely beat Georgia in 2008. You know their pilots use like cell phones to text each other, their GPS coordinates? Like Russia has no modern evidence of knowing what they do. And the way they invaded Ukraine, it's like they never played a game of Risk. You know, at the end of the game of Risk, when you have all the troops and you've gotten your reinforcements, what do? You go and you clean up the board with one direction. You don't spread your troops around. What are you, 12? What are you doing? They spread, like there's 12 vectors of invasion into Ukraine. I mean, and by the way, like, you know, I get a lot of questions like, Marko, is there reporting of Ukraine biased? Are we getting too much Ukrainian propaganda? You know, are Russians actually, no, it's even not biased enough. You know, and then all my Russian friends are like, bro, hold on a second. We did conquer some territory. Yeah, you won, like, what, West Virginia of Europe. You got some coal reserves? Like, good for you. You know, like, what is this, 19th century? I cannot be clear enough what a disaster this is for Russia. Now, what I got wrong, though, so I got everything of that, everything I just told you I got right, except I got the most important call wrong. Is Putin going to be dumb enough to invade? So, you know, given my view, like how disastrous this would be, I was like, I think 50% he's bluffing. You know, 50%. It's 50. No, it wasn't 50-50. It was clearly like 100% he was going to invade. And so I'm definitely beating myself on the head for that. Not surprised by what's going on, though, on the ground. Now, this is a big problem for Russia. A lot of people out there think that political science, geopolitics, is about quantitative analysis of material power, right? How do you know who's good? You do an order of battle analysis. Who's got more trains, planes, and automobiles? That's not what matters. One of the most important things in international relations is credibility of threat. You have to have a credibility of threat. You know, and that's why, like, some of the stuff Trump did in his first year was really smart. Like, oh, you're going to nuke us? No, I'm going to nuke you. You know, like, and, you know, I think Trump is credible because he's crazy. So that really worked well for the United States in negotiating with various people. With China, with Russia, their biggest asset was credibility of threat. Like, you mess with Russia, it's Russian military. Now they've lost it. They've lost the biggest asset they have as a country. Why do you think Finland and Sweden are joining NATO? They're not joining because they're afraid of Russia. They're joining precisely because they're not afraid of Russia. They've wanted to join since the 90s, but they didn't because they were afraid of what Russia would do. Now they're like, come at me, bro. I'm ready. So this is what's interesting about what's going on. And
you've seen the meme that Putin was awarded NATO Salesman of the Year.
I think that's perfect meme. Perfect meme. And so what does all this mean? I think what all of this means is that I think the current regime in Russia, like the days are numbered. You know, like they're going to have to do some house cleaning, and they've done that before as a country. People misunderstand Russian history so much. They focus on World War II. Russians can take the pain. This is a country that's had more revolutions than any other major civilization, guys. Time out. And they revolt against who? Weak leaders that mess up. So that's the Russia comment. Not surprised at all, but still got the forecast wrong. I am surprised by the private sector, though. I think that's a great question, Rich, and I think that's something we should really think about. Like, there is something going on in the world today that's really fascinating, how quickly the private sector mobilizes. I mean, it's not like the State Department was calling Starbucks and every one company, like, hey, can you guys pull out of Russia? This was organic. It happened quickly. And I think other countries in the world are watching that carefully.
Let's touch on India briefly. There are so many wonderful, accomplished Indian entrepreneurs and CEO at this conference. I've been coming to the Montgomery Summit for more than a decade, and I'm involved quite a bit in the TICON conference, thanks to my good friend Vish Mishra. What is your assessment of India?
You know, I think Indian tech is here to stay. I mean, I think what the Modi administration has done with the formalization of the economy, fintech is definitely doing great in India. We at Clocktower, we have a fintech VC. We've done a lot of work in Latin America. India is a great place. Nothing bad to say about that. From a macro perspective, however, from a macro public market perspective, India is the most expensive market in emerging markets. It's the best performing market for 2 years now, since the pandemic, better than the US. I don't know how many people know that. India is the best performing market since the pandemic. And a lot of that has to do with sentiment. It's not driven by fundamentals. What do I mean by that? FDI in India goes purely into the service sector, into tech, which makes sense because they're so good at it. It doesn't go into manufacturing. There is absolutely no onshoring or friendshoring happening in India. This is a fallacy. It's like an op-ed meme. It's not happening. The second issue is that Modi administration, super pro-business, we all love Modi, we get it, has backtracked on some critical reforms, structural reforms that would be necessary for India to become a manufacturing powerhouse. And the third issue is just that India has completely diverged from commodity prices, Indian assets. That's a one-to-one relationship in macro. It makes me, I sense that a lot of large institutional investors dumped China, bought India because of geopolitics and sentiment, not because what's happening in India is actually sustainably in the long term. India needs a manufacturing sector. It's how you escape the middle income trap. You will not escape the middle income trap, which most emerging markets fall into, because you have tech. It's not going to happen, like zero chance of that happening. Country's too big. Not everyone's going to be a software engineer in Mumbai. You know, so you have to have a manufacturing sector, and I think that's something that I worry about. I think India is a short. Indian assets are short over the next 12 months in the public markets. But in the private sector, I love Indian tech, and I would definitely put my money into innovators in India. It's the third largest source of unicorns, by the way, after US and China. It's bigger than any European country. So entrepreneurs, tech, yes. Public markets, no.
You said that tech's long decade of dominance is over, and by that you meant the software end of tech, I think. You said software will be owned by atoms. Nicholas Negroponte, if you remember, sort of delineated the world of atoms and bits, the world of physical things and the world of algorithms. And the world of algorithms have really kicked the behind of the world of atoms for many decades, really, by and large, because high finance and high tech in software perform so well. Why do you think there's going to be a swing and you see the decade of atoms ahead, and what does that mean for investments?
Yeah, I mean, that's a theme that other people before me have said. Like Peter Thiel had this view in 2015. He was early. So first thing I would say is that it's not true that software has beaten atoms for decades. They alternate. You know, so 70s were very much an atoms decade. 80s, meh, I'm not sure. 90s, definitely tech, definitely software. 2000s, definitely atoms.
Because we were in a commodity super cycle then.
Exactly.
Yeah.
Microsoft stock from 2002 to 2012 was 25 bucks. Just flat. If you had bought Microsoft in 2002, you made no money in 10 years. Even though their earnings went up, though. By the way, great company. So I think that, so this isn't like saying that companies in tech are going to suck. They're not going to produce like money, earnings. It's just that you're not going to get paid for owning them. And that's because the macro context today is one that's moving away from software. The disinflationary cycle we had last decade was great for the longest duration play in the world, which is tech companies. So first and foremost, we're in an inflationary world. The 10-year yield is rising. Now, your eyes are glazing over. You're like, whatever, bro, like my apps are awesome. Cool story. But that's the other reason that I actually would short tech. Like, it's not just this like 10-year yield is going up and therefore long duration assets. Like, that's a nerdy answer to why tech is not going to do well. The more like profound answer is like, what's happening in Ukraine? Like, what's happening in Ukraine on the ground? How much is software relevant? Zero. Zero. Remember all the cybersecurity people who were like, cybersecurity is the future of war. Where is that? I'm sorry? Where's cybersecurity in Ukraine? There isn't any.
Well, maybe that you don't see evidence of attacks means there is some.
No, there's none. I can tell you right now, what Ukraine is what it was for hundreds of years, putting men with guns on one side of the line and they shoot stuff at the other. That's what it comes down to. Now, there's some drones, there's some cool stuff, there's GPS, sure, but not the kind of software that we've been obsessed over for the last decade. Look, we're in a high inflationary context, not because of demand and stimulus. That's part of it. It's also because we need more stuff. We need supply. we've decided to rewire the whole planet for the green transition. We decided that. You know, is it pressing? Are we all going to die from climate change? Yes, probably. But it's still a choice we made. We have decided as human beings to rewire the whole planet for the green transition. And we believe in this. We invest in this at Clocktower. I'm just saying, we decided that. At the same time that we decided that China's now evil, and we need to rewire the whole supply chain at the same time. So rewiring energy, we're rewiring supply chains, and we're in a multipolar world where we all hate each other and we're invading each other, so we're now all going to spend more on military. We're software in that. More importantly, where's software that delivers a cheeseburger to you at 3 a.m. in the morning? Or that delivers to you a better app to, like, I don't know, aggregate your, like, whatever, saving points from shopping? Nowhere. Okay? None of this has to do with any of that stuff. It has to do with building trains, planes, and automobiles. Policy in nation states that are moving from laissez-faire capitalism towards dirigist, state-driven industrial policy are going to favor stuff over tech. So if you are 22 years old and you graduated as an engineer, take the software out of the front of your name and update your resume, all right, if you want to have a job in the next decade.
Maybe we should have listened to Mark Andreessen. I think he wrote his famous Software Eats Everything piece for the Wall Street Journal in 2012, predicting this age of software's ascendance. And then about a year ago, he wrote a piece called something, I think it was titled, Let's Go Build. And I think he was talking about physical infrastructure. It was time for that cycle.
Well, you know who I would quote? I would quote Chris Sacca, right? Chris Sacca, lowercase capital, one of the best investors in tech in the world. What's he doing now? Lower carbon capital, right? And he's investing in technologies that are really industrial. They're going to help us with a green energy transition. So this is one of the greatest private investors on the planet, and he's made the choice to pivot to atoms as well. And I think that's a really, like, an important signal to us.
We have a little less than 3 minutes left, so I want to talk about your book, Geopolitical Alpha, an investment framework for the future. What motivated you to write it? Sort of give us a synopsis, and then how one would read that and look at the world and see opportunity that could beat basic market returns.
Yeah, I was motivated by my partner, Steve Drobny, who wrote a book early in his career, and he was like, you need to write a book. I'm not kidding. Like, that was, go write a book, Marko. And then I was like, okay, I mean, maybe my grandkids would like to know Grandpa wrote a book. And then the third motivation was, I think a lot of investors in financial markets, right? So financial investors are being told that the only way to do political and geopolitical analysis is to pay some high-priced consultant, some ex-undersecretary of state for Eurasian affairs from the State Department, some past expiration date person who's going to waltz into their office once a year and tell them some bullshit, right? Or even worse, people who go to cocktail parties in DC who will then tell you what they heard at a cocktail party. And I'm like, that's not what we do when we analyze companies as investors. That's not what we do in our day job of, like, trying to figure out where macroeconomics is going. We can be data-driven in politics and geopolitics too. So the book, the motivation is to help normal investors, and especially investors who don't have money to pay, like, consultants walking through their door every day, to do their own analysis. If we're doing valuation analysis ourselves, if we're doing bottom-up analysis, if we're doing macro analysis on our own, we should be doing politics and geopolitics. And in terms of the big picture investment implications from the book, it's actually a framework book. It tells you how to do this job. I would just say that the big picture, like, thesis is that the world of the last 40 years is gone. I think we all know that. What's coming is the exact opposite. And what I mean by that is the last 40 years were all about the Washington Consensus, the laissez-faire capitalism. We're now getting more dirigist capitalism. You're going to have to analyze politics to know where the world is going. And also, the last 40 years, US hegemony, US power, unipolar world, really, really good time to be an investor. Hegemonic stability, as Charles Kindleberger would call it. We're now in something different. It's not a bipolar world. It's not Cold War. It's a multipolar world. None of us have ever lived in one of those. Last time we had that was early 20th and late 19th century. And that also means we have to think about geopolitics more. Now, for a lot of investors, that sounds really terrible because the last 4 years were awesome. But I actually like this. I think active management, macro discretionary approach to the world will win out over passive management, over systematic and quant strategies. They cannot like internalize these like non-data driven idiosyncratic factors. You know, geopolitics and policy are non-data driven, they're idiosyncratic. So what we're gonna have to do is we're gonna have to find the new George Soroses, the new Louis Bacons, you know, those big brains that can figure out where the world is going. And I would not be relying on passive or systematic or quant strategies in the investment world.
Well, Marko Papic, thank you for a very illuminating 30 minutes. Let's give him a hand.
Awesome. Thank you, guys. Thank you, Rich.